Hello, this is Cryptolyze. I hope you are well. This Tuesday, 12 December 2023. We meet today to talk about PENDL, the crypto from PENDL network. So there is a protocol that I already spoke to you about a few months ago, notably at the launch of Arbitrum. I explained to you that PENDL was one of the big Arbitrum protocols, and it's not for nothing. We'll come back to it. I'm going to explain the evolution to you. We're going to come back to PENDL, to the usefulness of the token in the protocol, and we're going to plan for the short, medium, and long term on purchase prices. Sale prices, and it starts right away. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress. PENDL is a decentralized finance protocol based on Arbitrum. To explain exactly what PENDL is, we need to understand what yielding is, and therefore remuneration linked to an asset. For example, if we take Steth, we talk a lot about the notion of yielding, and so here we talk about 4-5 for Steth. Steth, being the ETH stacked by Lido, and Lido stacks ETH for you, recovers the rewards that the protocol allocates to protect. We do not forget that Ethereum is passing through for your stakes and rewards you. In fact, you gives 90 of these rewards, and they get 10 back to take care of the stacking and management. So suddenly, you get paid to deposit your money, your ETH, okay? This is the principle of yielding, except that it varies. It is necessary to understand that it is this principle. The yielding will vary over time, because it is deployed according to the number of ethers which are stacked according to the transactions, according to the volume. There is a formula that fits, and that is valid for each of the yieldings that we will have on each of the protocols. The goal of PENDL is to dissociate yielding, therefore the recovery coupon, what the gain represents here at the level of Steth. Okay. So it's 4-5 and Steth itself, D agreement, therefore the asset and the reward for depositing the asset. It separates the two, and this is really the strength of the protocol. It implies that we can now really match the two and work on both. So it's a little more complicated than that. You have to understand that this implies that we have the possibility to be able to block a yielding, therefore a percentage of APR, therefore a percentage of yield, depending on the moment when we do it. And from the moment when it is fixed, that means that the protocol itself will precisely recover the already existing yielding to fix it for the rest of the year. And this is one of the strengths, and behind it, it gives the possibility of being able to do yielding trading. I think I will make a full video on it because it is relatively complicated, but it is excessively interesting. But what is of great interest in PENDL is that it allows large funds, institutional investors, to be able to actually set an APR, a real return, and which is based precisely on the protocol in himself. So it's a big advantage, and it mainly makes it possible to limit everything that is linked to price fluctuations on the profitability of certain rates. So certainly sometimes we can have a rate which is lower, but it will be a rate which will be fixed, and who will not. Precisely fluctuating, which is a big force. Next to it, PENDL went to 250 million total value lock with 336 million volume, which is just enormous. They went to Crosshain, Arbitrum, BNB, Optimism, so which is rather positive. It's this notion of decorrelation that I spoke to you about earlier, and they have a token called PENDL. And behind VE PENDL, I will explain this principle in a few moments. We must understand that the PENDL has a very strong utility for them. In a first sense, it is what will determine where the incentive will arrive at the level of the liquidity pools. You have to understand that it's a bit of the same principle that we find on Curve. The fact of having CRVs will make it possible to determine where the CRVs in emission will arrive. PENDL has the same functionality, allows you to do the same thing. So obviously there is an interest in having PENDL here to be able to derive interest on liquidity pools, which are interested in institutional investors, or people who actually own PENDL. So there is an interest in owning PENDL. An interest which is much more important because also aside, the PENDL and the VE bundle are linked to the platform itself. We have part of the remunerations of the protocol's income which are paid to PENDL holders, which whether through swap fees, through the APIs that are given, through the management of liquidity pools, there is a whole system that actually makes it possible to remunerate PENDL holders. So what is VE PENDL? The VE PENDL is the counterpart of the PENDL. You don't just have to hold PENDL to have access to all that. You have to lock them for example, 3-6 months, 1 year, 2 years. And in fact, from where you hold via PENDL, you will have an APR which is dependent on everything else. And it's really quite well done, above all well explained. I invite you to look at the documentation. There is everything that is explained according to the different APRs, where the sources of income come from, in what way, how it is done is given, how the votes are carried out, how the tokenomics was built, and the tokenomics is very interesting. We are at 91 tokens released, so quite little dilution. And the dilution comes mainly from incentives and a little bit of the team vest. But we see that there are less than 6 for the team. It's really huge. When we see protocols which are currently more than 15, we can see that it is very low. And when we combine the two, we have 25 between the ecosystem and the team. So to be able to maintain the protocol and the team. And alongside, in circulation, we have 65 and 10 incentives. So we have, yes, a little bit of downward pressure, but that is only valid on the 10. And that went until April 2026, so we still have time. And we have a protocol which is in diluted market cap, which is at 300 million, which is relatively low. We have a TVL which is approximately identical to the marked diluted cable, something which is very weak and very rare as we can see in all current protocols. And that's why I say that it is one of the protocols which is undervalued for me, which is underrated and which is clearly part of my portfolio, which I regularly top up when it is interesting. Because for me, it is a protocol that I use if only through its functionalities that I necessarily understand the usefulness that it will have subsequently. And I find the holding system and the interest of owning PENDL, which are interesting. There is an interest in owning curves. It is not used to pay for transactions. We have remuneration, which is linked to it. Above all aside, we know that it is used in a bit the same way as curves, of course, with much less volume for the moment, but we could very well think that there we have a TVL which is 250 million, when BULLRUN, we have a TVL which is 345 billion, and that is starting to affect us project. A little bit about the evolution of the price and what pricing we can set. So we have a big accumulation period. In fact, I spoke to you about it at those times, a while at that moment. I think I spoke to you about it. I started to tell you, be careful. It's a very, very interesting protocol. When it's going to come out on Arbitrum, we were around 10 centimes, and we see that now we are already in the... We've had a great time here at 1.7, to give you an idea. We've already performed well, but that doesn't mean we can't continue to perform, because the team really has a lot developed. So we have an accumulation of Wyckoff, rupture of accumulation, and behind it we are in a classic flow cycle, in which we had a huge candle which was swallowed. We did a classic retest of the rupture zone. So there we have a reaccumulation, reacceleration, retest. So it's very, very classic. Then we have a new reaccumulation, reacceleration, and there we did a little retest. So we see that we actually lack acceleration too, but which is logical given that we had an outbreak on precisely at the end of October 2023, and next to it we have a delay which is being carried out. For me, we remain in a level which still remains very interesting for PENDL. If we remain in the retest here of the 1, I will certainly reload again. And if we are going to retest here my golden zone in the surroundings of 0503, I will reload strongly, in fact, on PENDL, because it is one of the assets which for me are perhaps big nuggets for the bull run which is being prepared. Think we missed it? That's not the case, because I remind you that it has 300 million market cap. Just look at, for example, an AAV in full bull run and what that represents. Understand that this is an asset which is particular. There are very few protocols which offer the same thing as, if not none, and which will certainly be used by the big protocols on top, okay? So for me, it is exactly this principle. It will in fact be a subroutine to, for example, AAV or other protocols which will use PENDL to be able to build their own products. That's really the principle, and that's the general idea I have of it. So for me, in terms of market cap, it can very easily go for 3 billion, 5, 10, 15. And if it really works well, go beyond 30 billion. It is not a problem for the bull run to end with continued use of PENDL in other protocols and the advent of decentralized finance. For me, it's one of the small projects to keep on hand. I hope you liked this video. If so, don't forget to leave a like and a comment. It always makes me very happy and it supports the channel. And we'll see you tomorrow, 7, for the daily.